All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I hope you had a fantastic weekend. Market off to an interesting start here this morning. This is the kind of week in the market where when there is a catalyst, we tend to see significant movement. When there is no catalyst, it can be very flat, very dull, very dry. We start off with a catalyst here this week. And it's a two catalysts that I think are very interesting. One of them with China basically saying they're willing to look at some of the intellectual property rights and tightening those up, which has been a big complaint by the U.S. for many years, that intellectual property is not respected there in China, and so that has investors a little more bullish here this morning. And it's just one of those things where we continue to see the upside reaction to anything positive in the trade war be significantly greater than any downside reaction to anything negative. And, that just continues to be the theme. And I don't expect it to change anytime soon unless there's something dramatic that really kind of changes in the narrative. And so far, we don't see that. The other thing going on out there is a call out of J.P. Morgan talking about the market next year, and I'm going to go talk about that here after we take a look at the challenge. But a very bullish call here from J.P. Morgan, and one that we'll talk about the whys of that. Now for the challenge, I filled in the pricing just before I got on video: $12.90 for Netflix, $1 for Halliburton. So pretty much same spot they were Friday. At this time. I mentioned it in my note this morning. Netflix kicks off the day with a downgrade again. And I added the downgrade into the note. It was Wells Fargo, and, just this whole idea that, more competition is bad for Netflix, which is, we've talked about that over and over. It's a very flawed mentality, but it is the market mentality. And, it's just one where even with downgrade day after day after day, I think we've only been in the position one day where it hasn't been downgraded. Even with the downgrades day after day after day, there's serious buying coming in, right? We also saw last night that who was it? Korea, I forget who. Korea Investment Corp, I believe. They announced that last quarter they sold a third of their Netflix position. And, it's just one of those where, we can see there was some serious selling last quarter. And we continue to see, just some of the buying elements, come into Netflix here despite all the downgrades. It'd be nice to get an upgrade one of these days. Just give us an upgrade tomorrow. Let's get up to that 200-day moving average and call it a trade. But no, we're dancing around with the downgrade here this morning. Stock, was down $5. It has turned green here, and we'll see kind of how it trades around. But it's still a very nice chart here. Challenge also has some Halliburton, which is up about 7 cents here. Halliburton's gone nowhere since we've gotten in. And if you remember the entry on Halliburton, I did a little bit of lighter position than what was suggested and or what the challenge dictated. And, a lot of that was just a little concern of this type of action. Now, we do have OPEC, which is probably going to cut production here, but that might be priced into the oil market. But still a very bullish chart here for Halliburton and for Netflix. And so I'll continue to hold both here. As we go forward. The red stops do come into play tomorrow afternoon, but the green stops don't come into play until next week here. All right. Now, as far as any new triggers here, right? There's only one downside 3-7 crossover on the board this morning, and that's Verizon. Verizon has downside 3.7. This could turn into a bearish signal by the end of the day. I'm very interested to see if it does. We do have some lower highs that have come into play, so it's one where we'll see what that consolidation risk component is. But the theme here today are upside crossovers, right? When we look at the number of upside crossovers that are out there, it's a ton. And you'll notice almost every one of these stocks last week had a downside crossover crossover and didn't trigger bearish. Now they have an upside crossover. Names we've talked about like Triple M and Visa and Apple and Amazon, all with these 3-7 upside crossovers. Now, none of them qualify as signals as they sit right now, but I would not be surprised to see a Triple M, trigger bullish by the close here today. Caterpillar could. We have Intel here on the list that possibly consolidation risk component on it is still very high. But some of the recent underperformers like a CSX, could easily trigger here by this afternoon. So we could see 3, 4, 5 triggers this afternoon, depending on how the price action holds up. And, do have some cash available for the challenge to go after one of them. And if we see a bunch of them, I may figure out a way to go in and take advantage and, go buy either some Triple M or some, FedEx or some Juniper, depending on, what triggers, maybe Visa, depending on, what triggers we see out there at the close of the market here today. All right. So no changes, as things said, continuing to hold Netflix, continuing to hold on to Halliburton here. Now, this morning, JP Morgan came out with a call on the market for 2020, and 'tis the season. It is the season where, every analyst has to talk about next year. Their clients want to know what do they think about next year, and most analysts will frame their comments into if, then, to try to protect themselves. And then they'll kind of say, well, if things go good, market will go up. If things go bad, market will go down. And that's what you can boil a lot of the commentary around. JP Morgan a little bit different. But what's interesting is it's kind of the antithesis of some of the stuff they said at this time last year. Last year, they talked about some of the risks in the market heading into 2019. And that one of the big risks for the market heading into 2019 was the bond market, right? And the fact that in 2019 we saw bonds, fall at least until the end of the year. We saw bonds, sell off. And they made the argument that, look, investors have sold bonds and they're perfectly weighted in equities, so there's not a lot of room for equities to go up. Well, this year has happened. Take a look at what has happened to bonds here in 2019. Bonds have surged here this year. 25%, right? They've had a big year this year. In fact, it equates to what we saw in 2014 and, according to JP Morgan, what we saw in 2017. Their idea is this, that the retail investor is too heavily weighted in bonds. And that in 2020, the retail investor is going to turn it from a headwind in the market to a tailwind, to where the retail investor is going to come in and provide further lift for this market as they rotate out of bond funds and into stock funds. And they use, past big rallies in bonds to show that, hey, that is what we have seen before. I think it's a pretty interesting argument. I think there's some validity to the argument, especially if we see, some sort of calming of the trade war between the U.S. and China. And, is something that, is giving some investors some confidence here today. I know there's a large contingent out there that says markets at new highs, it has to pull back. Markets at new highs, it has to pull back, which is just one of the most flawed mentalities that's ever existed in the market. You could just take a look all through here, 2013, 2014, 2015. Market's making a new high. It doesn't have to pull back. 2016, 2017, 2018, market's making a new high. It doesn't have to pull back. The market has just started making new highs after a fairly decent, consolidation. There's nothing that says this has to pull on back. So, JP Morgan with a very bullish call here this morning. One that I think makes sense, not one that I just say, well, I'm going to go buy anything and everything just because JP Morgan said it, but is something that I do think investors, need to keep in mind and is bullish for the banks. It is bullish for, most sectors that are out there in the market, except for maybe some real estate. Might be a little bit of a headwind for real estate, might be a little headwind for consumer staples here as well, depending on kind of how things move. But, going into 2020, JP Morgan basically saying the grass is pretty green and only going to get greener. And I can't argue against it. Given what we saw last earnings season, if we see some trade war evolution to where things calm, and, we do see some major concessions out of China and out of the U.S., the tariffs start to drop. You could argue that from a pure just valuation standpoint, this market needs to be about 15% higher to stay with what we have seen over the last 3 to 4 years. And that would be a pretty big tailwind here going into 2020. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on with you here this afternoon, and we'll talk to you then. Take care.